And remind us, you're a Bitcoin VC firm. You're very much focused on that particular part of the crypto sphere. How is your area, how are your startups faring at the moment?
Well, Bitcoin founders tend to be very financially responsible. And so folks have prepared long in advance for the crypto Bitcoin bear market. In fact, what they're doing now is finding ways to take advantage of it. And so there's two things that are important. One is just to build and follow the established roadmap. A bear market is a time where you get more resources to dedicate to building because you're not struggling to just keep your head above water with growth. But the second thing that we can do in a bear market is to take time to really dive into the engagement and adoption metrics from the bull market or from really any part of the market cycle and start to understand what users are saying about the product and the protocols. That will be the experience of this market for really top founders in the space and what we're seeing from our founders.
And so what of that data, early though it might be, what is that data telling you about as and when we exit some sort of crypto winter, what people are going to want, what sort of efficiencies, what sort of real use cases are going to be built?
Well, frankly, people want the space to continue to mature. So some of the collapses that we're seeing in companies that were making promises that they couldn't keep around yield, product, or otherwise is starting to drive home the point to folks holding digital assets that there needs to be more accountability. That's possible in Bitcoin. And in fact, Bitcoin was to allow for transparency in the ecosystem because, as you know, the Bitcoin blockchain is a public ledger. As an example of something that customers are starting to demand or should, you can ask for folks holding your Bitcoin to be able to prove those reserves. We know that some of the platforms that had promised these lending-based yield returns, we know that some of those platforms are now telling their customers that, in fact, they don't have the funds that they said they had. Now, with Bitcoin, you can, and other digital assets, you can actually demand of exchanges or other platforms holding your assets to prove that they do so. And so proof of reserve software is available and customers are beginning to demand it. The first company to launch to introduce a SaaS product, an SMB and enterprise SaaS product here is Hoseki out of Fidelity. And that's fortunately for us, a Stillmark portfolio company. But we're also seeing another trend, and it's something we see in every bear market, which is folks look at the option to be their own bank. That was one of Bitcoin's core promises, that you wouldn't have to rely on third parties to custody or to store your funds. You could do it yourself. That's also very difficult. But we now see in the market the acute pain and realization of what's at risk if you're not holding your own funds. And so we're seeing consumers recognize the value of that and send funds to companies like, for example, Kaza, another Stillmark portfolio company. And this space is a bit more mature. And so there's several options that you can use when custodying your own funds.
What about those lending protocols more broadly, Alyse? And what about yield farming? I mean, is that sort of idea as it stands dead? And what ends up being what flourishes out of that?
Well, I think the concept of producing yield from a black box or making promises that can't be backed up with, frankly, economic activity that drives the yield, I hope that is dead. What we saw in this last bull market was the concept of yield generated with a complete lack of economic activity. And in fact, we saw leaders in the DeFi space explain it as putting money into a black box and taking out more money. This, of course, this is sort of a fantastic proposition that we're now seeing is just something that can't be secured over the long term. And so yield in that way, sort of like the hopes and dreams-based yield, I hope is dead. We will see products mature that can offer real yield based off of economic activity. And an example of that would be the ability to create yield on Lightning Network by lending out your position in the network to others that need it.
Of course, it was Sam Bankman-Fried who referenced that black box on our very own podcast with our own Joe Weisenthal and Tracy Alloway about odd lots. And he's gone on to be the white knight of many of these lending protocols and platforms that have sort of taken a tumble. Alyse, more generally, are you worried? I know you've seen bear markets before, but with the lack of activity that we're seeing on the space, does that worry you in any way, or are you just still feeling that this is a matter of time?
In terms of in terms of entrepreneurial activity, we're seeing a flourishment actually. And so we have these really lovely tailwinds in the Bitcoin space provided by Lightning Network Now, which is growing in adoption, as well as something on Lightning Network's roadmap, which is the introduction of other digital assets to the Lightning Network. Most importantly, the introduction of stablecoins to Lightning Network. That's a tailwind for entrepreneurs in general, including folks that haven't even gotten started yet. I think of it as a similar opportunity as cloud and mobile introduced in 2008, which we know carried companies like WhatsApp or Uber even to great success through 2008 and beyond. And so that opportunity exists today for innovators.